Early in my property investment journey, I nearly lost $180,000 on a single property purchase. The location looked perfect on paper, great rental yields, affordable prices, and even had some new infrastructure coming to the area as well. But there was one critical factor I missed that would have destroyed my investment property within the next 18 months: the location. Luckily, I caught on before signing the deal, and today I own over 150 investment properties worth over $100 million. But in my many years of analyzing thousands of property deals across Australia, I've seen property investors make the same devastating location mistakes over and over again. So in this video, I'm going to reveal the 5 locations that will absolutely destroy your property investment wealth and the hidden red flags most investors completely miss, and how to spot these danger zones before you sign on the dotted line and actually purchase a property. Coming in at number 5 today of the 5 locations that you should not buy in Australia in 2025 or 2026. Number 5, you probably guessed it, far northern Queensland, specifically areas such as Rockhampton and Townsville. Now, a little bit about these particular locations. First of all, I have never bought properties in these locations. So in terms of buying properties, I cannot personally speculate, but there's a good reason for that. I own over 150 properties in my own personal portfolio, and I've mainly stuck to more so metro locations within an hour radius of large capital cities such as Brisbane, Melbourne, Adelaide, Sydney, Perth, etc. The total population, which I've just double checked on my phone here for far northern Queensland, is just shy of around 300,000 people. Now, to me, one of the reasons why I would not invest in this particular location is because if you look at the average medium house price for, let's say, a house in Rockhampton or Townsville nowadays, that median price, depending on what suburb you're in, may still be between $500,000 to $600,000. Now, one of the things I personally do as an investor is look at where is potential value, where is an opportunity, and where is a discrepancy based on a purchase price and affordability mixed with other metrics and data like population and other things like that. But if I've got, let's say, $500K to spend right now, I personally would not buy a property in far northern Queensland for $500,000 because, for one, in terms of the market cycle that it sits in, it's already had a fair amount of growth over the last few years. A lot of people have been pushing, a lot of random buyers agents, definitely not us because we mainly only go for metro locations, but they've been pushing buying houses on big blocks of land and all that stuff in affordable regions like this. And while this has had some growth over the past 3 to 5 years, these types of properties now, I believe, are basically at that affordability price point where the median house price might be $500,000 to $600,000. For the same amount of money, I would much rather buy in a metro capital city right now in 2025, going in 2026, such as Melbourne, because within the Melbourne market, you can purchase a house or a townhouse or even a unit for around the same price, $450,000, $500,000, $600,000, but you're buying into a capital city where there is 6 million people plus. So for the same price point, I would, long story short, always pick the bigger economy over the other one. It would be different if it was only half the price and Melbourne was double like the price right now. But in the outskirts of Melbourne, like 20, 25 kilometers, 35 kilometers on the outer rings of Melbourne, which is still 30 to 40 minute commute to Melbourne CBD, which is the sweet spot affordability. It's just like when I was buying properties in Queensland and Adelaide and Sydney and Perth, all within, 30, 40 minute on those outer rings, the affordability zones, and they've all doubled. And what I'm saying is Melbourne's going to do that again. So if I had $500K, long story short, I would not be buying, absolutely no way in hell, in far northern Queensland. I unfortunately spoke to a property investor out there that actually recently bought a property through a random buyer's agency, and they bought in far northern Queensland and they paid like $525,000 for. And the moment that I was thinking of this, I was like, that is the dumbest decision you could ever make, because you can make so much more money in other locations, mixed with the different strategies that we, of course, buy with. Like, I'm always going to buy properties that are below the bank valuation, that are in line with a growth cycle, which none of these areas are in line with the growth cycle right now. That's why they're on this whiteboard behind me of places not to invest in. So that is number 5, far northern Queensland, Rockhampton, Townsville, places like that. I would definitely not be buying there at all. Location number 4. This one may shock the hell out of you, but it is the Gold Coast in Queensland. In 2025 and 2026, I would not be buying an investment property in the Gold Coast of Queensland. The main reason being is affordability. Affordability in this particular zone of the Gold Coast, as you should be aware, the Gold Coast has experienced significant growth over the past 7 years. I was personally buying many properties. I own a lot of properties myself in the beautiful Gold Coast. And I bought hundreds of properties in the Gold Coast for our buyers agency clients over the years. But particularly, we bought these properties between 2018 to 2021. These same properties that we were buying for $180,000 are now $650,000. The market literally doubled and tripled. It is insane how much growth has happened in the Gold Coast, which is an amazing thing if you got in at the right time. And the affordability just isn't there from an affordability standpoint, but also from a rental yield standpoint. In terms of the population of the Gold Coast, you probably I haven't looked at it in a while. Last time I checked, it was a few years ago, and it was around 600,000 people or 500,000 people back then. So again, right now, the affordability isn't there. In terms of the cycle of where that market is and how much growth it's had, I believe it's got a plateau for the next 3 to 4 years and have very minimal growth. We're talking maybe 1, 2, 3% per year. But what I'm talking about in terms of massive growth is we're talking similar to what this location did, many years ago between 2021 to 2023, where it was jumping up 20 to 25% year on year. And it was going through a massive growth phase. Not just 1, 2%. So I expect the Gold Coast to literally be very up and down, plateauing for the next 3 to 4 years until later on. So the Gold Coast is number 4. Again, I would not be buying here if it was me for investment property purchase reasons. If you're going to buy there to live in there, then that is a different story. But if you're going to buy to try to make the most amount of growth in the shortest amount of time, I would not be buying in the Gold Coast. Location number 3 on the board is a location of Canberra. Now, I have personally never bought properties in Canberra. I'm not a big fan of Canberra, and why is that? First of all, the population in terms of the amount of people that live in Canberra, off the top of my head, there's probably around 500,000 to 600,000 people that live there, maybe even less. The second point is the price point to which that market is. What is the average median price for a house, or average median price for even a unit or a townhouse or a villa? Those 4 key different types of properties that are great to invest in that are normal residential. The median house price to get a house in Canberra may be over $1 million or, the high 900s. So it depends on which location you're buying in, but the rental yields are very, very low. The affordability in terms of how much the actual properties cost themselves and how much growth it's already had, and overall the population. The population, to me, I just don't get excited enough talking about 400 to 600,000 people, especially going back to the same point. If I only had $600,000 to use to buy a property, where in Australia would I see right now is the best location that has the most amount of opportunity? It's in none of these locations. That location between 2025 and 2026 right now is in the Melbourne location. Number 3 location I would not be buying in is Canberra. Don't like it. Not a good deal. Location number 2 on the list is the Northern Territory, NT. Now, again, I have never bought in Northern Territory, and for very, very good reason. The location, the infrastructure, the population, the growth, all the issues, the ups and downs that it has, I would not be buying there. Again, does it tick out of the 5 major things that I look for? Number 1, as an example, 4 to 5 things being population. So Northern Territory population right now, roughly around 260,000 people, rounds up to 300,000. It just doesn't get me excited enough to be able to buy a lot of properties there for myself or for clients. You can say that there is parts of Northern Territory that are affordable, but to me, it's affordable for a reason, because there is not as much demand versus the supply that's actually in these areas. It's very segregated. It's far away from other locations such as Queensland and Sydney and Melbourne and obviously, Adelaide and Perth. So to me, it's just, I wouldn't be buying properties in Northern Territory. The time of the cycle, it hasn't had much growth. Look, it possibly could have decent growth over the next 3 to 4 to 5 years, But even saying that, I don't believe it's going to be a massive amount of growth that I aim for. We're talking 15, 20% per year. So it might add 2, 3, 4, 5% because it has been very stagnant in terms of the cycle for quite some time. I'll give it that. It has been very stagnant and it's gone backwards for the last 10 years. So sooner or later, Northern Territory will most likely go through a bit of a boom and most likely go through a cycle and actually experience capital growth. However, even saying that, if it does in the next 2, 3, 4, 5 years, I personally won't be involved in it because it's just too small. And I believe, again, if I had only $500,000 or $1 million to spend on a property, I would prefer the much bigger economy, the much bigger location, the population, such as Melbourne, Sydney, etc. So number 2, the second place on the list that you will lose money in if you invest is Northern Territory. The number 1 place on the list are places where you should not invest in Australia. The location that takes the cake for the worst spot to invest in right now in 2025. I never thought I would hear myself say this because I've invested in this location myself and I've always been a big believer in this location. But the worst spot that you could be investing in 2025 and 2026 is Adelaide. I've been a big fan of Adelaide for quite some time. I started my second property I ever bought in my entire portfolio was in Adelaide and in Elizabeth South of all places. And people said I was absolutely crazy for buying there. But I bought over a dozen properties in Adelaide, at least, probably close to 20 for myself personally. And we bought probably over 100 properties for clients. But particularly, we did so within a certain time period prior to this massive growth explosion that Adelaide has had. Between the years of like literally 2015 to 2022, we were buying very heavily in Adelaide. We picked up houses for clients between 150,000 to 200,000, 300,000. And literally within the last 3 years, Adelaide, between let's say 2021 to right now, 2025-ish, Adelaide has literally doubled and tripled in value in some locations. Houses that we bought for clients for 200,000 are now 650,000, 700,000 or even more. So Adelaide, in terms of a growth cycle, it has had a massive amount of growth over the past 5 years. Usually a cycle after a big period of growth, it'll either plateau up and down, minimal fluctuations are between 1 and maybe 5% after a big growth. So it could go plateau for a while, or it will start to come back and pull in and basically have a price correction, some people call it. And after, let's say, 100, 150% growth in a short period of time, it might come back 10%. But then, long story short, it won't, the odds, and what is the pure logic of it, if you look at it from a logic perspective, if a property, as an example, has gone from 200,000 in 2020 to now 600,000 in 2025, so it's tripled in value over the last 5 years, what are the odds of it going from 600,000 and even doubling to 1.2 million in the next 5 years? It is very unlogical for that to happen. It basically would never happen. It's going to go side for quite some time. It's going to have up and down fluctuations, and then it will go through the cycle again in likely 7 to 11 years from now. But for now, in 2025 and 2026, I would not be buying in Adelaide because you're buying just after it's doubled in value, tripled in value. When the properties were more affordable 3 to 4 years ago, the rental yields were high. You could get a very good rental return. Now, because the prices have gone up, the yields have basically decreased. So you've got lower rental yields now in Adelaide. You've got the affordability is reaching its peak. And when I talk about Adelaide, I'm talking about the metro region of Adelaide. But also following that, I would not be buying in regional areas of South Australia. There is a lot of other buyers advocates buying in regional areas of South Australia. I would not be buying it because look at the amount of money that you personally have to invest. And if the average person is trying to buy their first property between 400,000 to 700,000 from an affordability price point, you don't get good value in any of these 5 places anymore. So now you know how to avoid these terrible locations. But that's only half the battle won. Because while you're busy avoiding the disaster zones, other smart investors are quietly buying in the locations that are about to boom and the best locations to buy in right now. Places where property values are set to double, rental yields are strong, and the fundamentals are absolutely rock solid in these locations. So make sure you watch the next video where I reveal 5 best suburbs to buy in 2025, including the exact suburb where I'm personally buying multiple properties myself right now.